Welcome to our daily Forex market analysis, and this is for trading on June the 11th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, especially under these current market conditions when things are so volatile. So please be careful with your money. As usual, we'll start off by taking a look at our calendar here. So starting off with the big event for today, which was the Fed meeting. And this was an important one because now that the economy is starting to open up, as well as the stock markets are back into all-time highs, I guess all the traders wanted to see what the Fed had to say. So what came out of that meeting? First thing, the Fed is keeping things as they are. They are going to continue with the asset purchase program at the current levels that they were doing them at. So that's one. And another thing that they said that they're not looking to raise rates into 2021. So this was the Fed meeting here. They are saying that there will be a 6.5% decline in GDP, and the employment actually may be as high as 9.3% unemployment, but it's supposed to get better to 6.5% towards the end of 2021. So things are going to look better, or they are looking better, and 5.5% at the end of 2022. Like I said, they're not going to the interest rates. They kept it the same, and they are going to keep it at almost zero all the way to at least 2022. So everything is the way it is. They're making the bond purchases that they have been doing currently of $80 billion per month. They're going to continue. They're also spending about $40 billion per month in mortgage-backed securities and other things like that. So they're going to continue with that as well, which means the Fed is going to continue to fund the market. They're going to continue to put money into the market, which is positive for the stock markets. They want to see that. And then other than that, another question was the comments in regards to the protests that are going on. Currently, there's a lot of social unrest in the US, and justifiably so. Fed, however, this is not something that Fed can do anything about, and they're not going to. It is a social and political issue, so they're going to basically treat it as such. They don't think there will be a negative impact on the market from this. Especially because if there are, peaceful protests, that has nothing to do with any sort of negative impact on the market. So they're staying out of that in terms of taking action, in terms of putting more money into the market. I personally don't think Fed needs to do any more, because they are already flushing the market with easy money at this point. So what they're expecting that the rebound is expected to begin in earnest in 2021. Of course, it's beginning now as the economies are opening up around the world, especially the US economy is opening up. Things will get better as people go back to work, but they are thinking that in 2021, things will look really well, and they are looking at growth in GDP of 5%, right? So this year, they think GDP will decline 6%, which is not bad considering what's going on right now with everything being shut down with the COVID. So next year, they're looking at about a 5% growth in the economy, which is really positive. And then they did not mark down their long run estimates of full employment. They said we should be back to that at some point. In the long term, things look fine, is what they're talking about. So basically, bottom line is they're keeping interest rates low. They're going to continue putting money into the market, and that's that. They're not going to increase the interest rates. All in all, that is very positive for the market. Now, going back to our, now having said that, markets that are at all-time highs. So we are back at pre-COVID levels in the stock markets, and that doesn't look right. So I do expect a certain bit of I think they're overbought personally. So I think we are likely to see a bit of correction. Now, I'm not expecting a huge drop in terms of a double bottom type of thing, unless there's a second wave, which we'll have to then worry about it at that point. But right now, I think because everything is so stretched, so overbought, we may see a bit of a drop. And prior to the Fed, we saw today with a lot of Forex crosses, things were just sideways. Mostly everything was sideways. And it was really, really choppy market. And especially during the Fed conference, there was a lot of whipsaws in all the crosses. Basically, everything was going crazy. And we'll take a look at the charts in just a sec there. But overall, so that's what it was, right? So this was the result of the Fed conference today. So now that that's behind us, I think we're likely to, basically the market will continue to do what it was trying to do or it was doing before. So that's Fed, so that's behind us. Coming up here on Thursday, we do have Eurogroup meetings here. Anytime there are meetings, we have to keep in mind any comments that come out of these meetings. So right now, things have been very good for the euro and for the Eurozone, because the package that EU put together was very positive. Instead of the 500 billion, they actually went for 750, and pretty much most countries are, and they're not loans, they're grants. So that's a positive thing as well. So overall, there's a lot of optimism around that. But I don't foresee any problems in accepting that package. But you know what, anytime there are meetings of a group, there will be comments, and those comments can have an impact on the market. So watch out for that. And it will be the euro that would be impacted by that. So we'll keep an eye on that as that develops. Other than that, we have core PPI numbers here. Now, these numbers, market is ignoring any kind of negative numbers at this point. I would not expect much of an impact from, as far as the numbers are reasonably in line with expectations, I think it will be okay. It's only if it's a complete, like really bad number that will make a difference, but not otherwise. I think we'll get a pullback in the stock market more because it's stretched rather than the impact of the negative news. Most of the news that we have been seeing lately out of the US has been just all over actually, across the world. Different countries has been more positive because of the business confidence numbers are up, consumer confidence numbers are up. So everything is looking up because the economies are opening up. So I would expect that to continue. Now, unemployment claims. So this is where the picture has changed a little bit. Before all these weeks, we were talking about job cuts. And now the last non-farm payroll, we actually saw an addition in jobs. So jobs were added. So right now, they're looking at about 1.5 million additional unemployment claims. The number may not be as bad. So we'll see. If that number is huge, like if this number comes in at 3.5 million, that would cause a problem, and I would expect a drop in the stock market as a result of that. But if it's somewhere in this area, I would not expect much of a change. I think this is just business as usual, because we all know, things have been close so far. So anyway, the bottom line is not expecting huge response in terms of data here. All right, so let's take a look at our, one thing to keep in mind is as we move closer to end of June, we have to keep an eye on Brexit comments. So far, UK has said that they do not want to extend the deadline for Brexit. So the deadline for Brexit is end of this year, December 31st. However, if UK wants an extension, so that in order to push things back, they have to apply for that extension at the end of June, which is in just over 2 weeks here. And leading up to that, there will be a lot of negotiations around Brexit between EU and UK. So if there are concerns, if let's say both of the parties are not reaching agreements or they are fighting over things and the negotiations are going bad, that will have a negative impact on mainly on British pound, but it can seep into the euro as well. So that's something we'll have to pay attention to or just keep in mind as we move forward here with this month. So let's go on to our charts here. So we'll start off with euro dollar as usual. So euro has been going up at this point. Now today's candle close is neutral. So if we take a look at the hourly chart, for example, things have been sideways, and then we have these crazy wicks from the Fed meeting. At this point though, I am still neutral on this because I'm not super bullish, because we are almost into the highs, and just like we had this big move to the upside, we have a big move to the upside here too. And now we're nearing the top. So I'm not too keen on buying into the highs, but it can go higher because the market is still the same. And at this point, I'm neutral. What I'm going to look at is how price reacts to this 1.1340 level. If it holds above this, or even 1.1350, around that, if it holds above this level, then we may see another continuation to the upside, and that can happen. Or if we get a deeper pullback, I would look at even into the lows of today. If price is not able to break the low of today, we may just see a retest of that before price takes off again. So the support becomes very, very important at this point. I'm looking at anywhere from 1350 to 1325-ish, 20 area. So there's a 30 pip about the support zone, I would call it. So that's what we have to look at. If it breaks through the support, then I'm looking for price to drop. And in that case, I will look for price to come back down towards 1.1265 and even potentially into 1.1240. For now, though, I'm neutral. So I'm just going to keep an eye on this on the support. If it holds above, looking for a move higher. If it breaks through that, I'm looking for a move back into this pin from yesterday. So bias for now is neutral. Now, here's the thing. If our stock markets start to drop, then US dollar, in the past, it has acted as a safe haven currency. So US dollar crosses, or US dollar may become stronger, which means US dollar crosses may drop. So just keep an eye on that. So neutral bias here for euro dollar. Pound dollar here, this one is looking bearish to me. And in this case, the reason for this is we are into this, actually, let me just change the lines here. Those are, I think, hard to see. So here we go. So as we can see here, price is into resistance here. And we have a pin bar today. So bias is bearish here. I would look for price to drop a bit here. And target here is back into 1.2620. So bias here is bearish for pound dollar. Now, keep in mind the support. Again, support is very, very important. It hasn't been able to really hold below the support for over the last 2-3 days. So we have to make sure that support breaks for it to continue lower, because if it doesn't, same thing as we talked about euro, this one could continue higher as well, because the move essentially is still, the trend is still to the upside. And usually the problems happen when it's at a turning point. It's easier to catch a trend than when it's a turning point. So this is why we have to be a little bit more careful. But bearish bias, just be cautious of the support. So that's pound. Aussie here, Aussie is neutral as well. So like I said, if the stock markets drop, Australian dollar and New Zealand dollar are likely to drop. So those are, we do need to keep an eye on the stock market when trading the Australian dollar here. It is neutral though. As we can see, price has been trading in this range for the last few days here. It is into the highs from December of 2019. which is pre-COVID. So price has basically all this entire drop during COVID has been recovered and then some. So quite a stretched move here again. So I would look for price to come back down into 0.6900, which is the support level here. Again, let me just use darker so we can see these, I'm looking for price to go towards the base here, which is 0.6900. So bias here is neutral for Aussie dollar. Now, if it doesn't break through, if it holds above 6,900, then I will look for, again, it to go back up and we could see a move back up. Or what could happen is price could just get stuck at today's low. And today's low was at 69.30. So if it holds above 69.30, then we are definitely going back up. So we'll have to keep an eye on first today's low. If it goes through that, then I'm looking for price to go into 0.6900. So bias is neutral for Australian dollar. New Zealand dollar, this one is also looking neutral here. So in this case, we see price has tested the high a couple of times here. It wasn't able to break through it. We are into resistance. Again, we have gotten past our COVID drop here, and we are back into this December levels here again. So in this case, first we have to be careful with the support from today. If it holds above, again, we are likely to see a further move to the upside. So especially if the stock market starts to turn higher, then these one will go higher as well. But for now, I'm looking for a move back into the pin from a couple days ago. So 0.6470 is the target here. So neutral bias for New Zealand dollar. Now, if it goes through this, then of course we are in for a bit of a move to the downside, because then the trend would shift, and then we can look for like 6,400 will be the next target after that. So for now, bias is neutral. First target is 6,470, second target 6,400 here, but only if it breaks through the support. Dollar CAD here, dollar CAD as well has been trading in a bit of a range here. So as you can see, that was the high, and then the low was at the tips. Price has been in this range for the last 4 or 5 days here. At this point, we see that price has rejected the low, which was today, and it rejected the high yesterday. So this is, again, neutral here. One day is completely the opposite of the other day. It looks like market is trying to find its feet right now. And as it does that, we just have to be patient and see which direction market wants to go. Usually the rejection means that price is likely to go in the other direction. So we'll keep an eye on that. But if it doesn't get through this resistance at 1.3435, if it holds below, then I will look for a retest of the low again. So keep that in mind, but my bias is neutral. And I am going to just look for a move between 1.3490 and 1.3320. So that's the range, and I'm going to just leave it at that. We'll see if it breaks through today's high, then I'm looking for the higher part of the range. Silver here, this one is interesting. We have seen price move in both directions, and there was a bit of a range that it was trading in, which it broke out of today after the Fed meeting. And now it did break out, but that was a really inefficient move here. So what I'm going to watch out here would be at this pivot level at 17.90. If it holds above, then we could see a continuation here. So the candle close for the day was definitely bullish. And with this one, if we see the stock market drop, actually, let me take a quick peek here at S&P 500. So if we see the stock market drop, then we're likely to see silver. This will be hard. What I don't like about this is the inefficient move here. So okay, so actually let's ignore the stock market for now. So what I'm going to look at is this. This is an important support resistance level. If price holds above 17.90, I'm looking for it to go higher. If it drops through that, then definitely looking for it to come back into the 17.50 area. So for now, bias is neutral here for silver. Gold here, gold is kind of in the same, it kind of falls in the same sort of category as we saw with silver here. We did have a nice bullish candle close. The problem is it shot up. And when we have such inefficient moves, it can come back and fill this inefficiency. So in this case, bias again is bullish to neutral, but again, we are into our resistance. So at this point, I'm going to look into a potential pullback. And in terms of the pullback, I'm looking for a pullback right into this 17.2728 area. And again, if it holds above, then looking for a further move to the upside here. So keep that in mind. It is so bullish to neutral is what I'm looking for. And should it go through that resistance, next target is 1750. So bullish to neutral bias here for gold. Oil here, oil is still looking range bound here. Today's candle close is neutral, hasn't really made much of a difference. During the day, it did go up a bit, but nothing really, it's been stuck in this range. So bias is neutral, looking for it to trade between 14.50 and 37. So neutral bias here for oil. Copper here, there is a big move up today in copper. It is looking bullish, but we are almost into this resistance here. So keep an eye out for that. Bias is bullish. 2.68 is the target. But if it doesn't break today's high, we could see it come back down into 2.60, back into the support resistance level here. So bias is bullish with caution though. Bitcoin here, Bitcoin has been stuck here sideways for quite some time. It is trying to push into the highs. So as soon as it breaks that, we may see a quick move back up into testing the high of that pin there. So that's worth keeping in mind. So bias here is neutral to bullish. And in terms of a range, it's been trading in this range. And here it's trying to push higher. So only way we'll know is if it breaks the high, then I will expect it to shoot up there. But if it doesn't, then we're looking for a move back down again. So bullish to neutral for Bitcoin. S&P 500, this one is bearish here. We do have a bearish candle close for the day. But like I said, everything that Fed said was actually what they have said previously. It was to be expected. And as such, even though price may be dropping, I am not convinced that it is like reversing yet. So the reaction may be more of a knee-jerk reaction, and that's something we have to watch out for. So I would say bias is bearish with caution though. And in terms of the target here, we're looking at 3140 and then 3100 is the bottom of this level here. So 3140 and 3100 are the two targets for S&P 500. So bearish bias. Again, take it with a grain of salt because there is so much optimism in the market. So if it drops, there may be people buying again because all of a sudden it's cheaper. So keep that in mind. So bearish bias with caution. Nasdaq here, Nasdaq closed higher actually and still looking bullish. Now we may get a pullback into 10,000, but as we can see, it went right into the 10,150 level here. Next, I'm looking at 10,300. That would be the next target. So bias here is bullish, and essentially the move I'm looking for is this. Now, if things turn and S&P turns, Dow Jones turns, then Nasdaq is likely to turn as well. In that case, we may get a move back down here towards 97.50. So we'll take a look here. So if it breaks through the support, I'm looking for a drop, but otherwise looking for a move higher because the bias still remains bullish with this one. And then Dow Jones here. Dow Jones is looking bearish. We do have a nice bearish candle close, but we are into support, so just be aware. And next target here is 26,220. Below that, 26,000. So bias is bearish for Dow Jones. DAX here, also looking bearish. Not that it means anything because by the time it opens, things may have changed completely again. So for now, bearish bias. Next target is 12,320 and potentially even 12,260. So bearish bias here for Dow Jones as well. FTSE here also looking bearish. Next target here is 6250. And again, if the rest of the equity markets start turning, this is likely to turn as well. So for now, looking for a bit of a pullback here. And then Nikkei here. Nikkei does have a bearish candle close, but that may just have been as a result of the Fed meeting today. If it doesn't break, so bias is bearish, but if it doesn't break the low here, if it doesn't break through 26,680, this one can go back up, right? So it's right into that area where we could see a turn in the market, but it's not written in stone yet. So we just have to be careful. So bearish bias, next target, 22,430. And that's it. Any questions?
No, not for me.
Excellent.
Perfect.
Yep.
Awesome. You guys have a wonderful trading day. I'll see you tomorrow.
Sounds good. Have a good night.
Thanks. Have a good night.
Bye.